To provide you with an in-depth understanding of the various types and classifications of farm records necessary for effective decision-making, financial accountability, productivity tracking, and overall agribusiness sustainability. Farm operations, whether smallholder or commercial scale, rely heavily on a structured system of record-keeping to run efficiently. In this module, we explore the major types and classifications of farm records, each playing a critical role in organizing farm operations, securing financing, planning production cycles, managing risks, and meeting regulatory requirements. Understanding the various categories of farm records is like organizing different sections of a library. Each record type stores important information with a unique purpose, and together they offer a full picture of the farm's performance and health. Financial records. These are arguably the most critical farm records, especially for agribusinesses that aim to make a profit, qualify for grants or loans, or assess long-term sustainability. Financial records track income and sales, revenue from produce, livestock, dairy, eggs, etc. Expenditures, seeds, fertilizer, veterinary costs, machinery repair, labor, etc. Profit and loss statements, summaries of financial gains and losses over time. Cash flow statements, cash inflow, sales, loans, etc. versus cash outflow, expenses. Balance sheets, assets, liabilities, and equity of the farm business. Example: a maize farmer keeps a monthly record of the amount earned from harvest sales and money spent on weeding, fertilizer, and transportation. This helps the farmer know whether they are in profit or loss. Production records. These are records that track all activities directly related to crop or livestock production. Production records allow farmers to optimize farming operations by identifying which methods yield the best results. Includes land preparation and planting records, fertilizer and pesticide application logs, harvest dates and yields, livestock feed records, animal health and medication logs, hatchery and milking records. Example: a poultry farmer logs the daily egg production per bird, noting fluctuations and associating them with weather, feeding, or health patterns. Inventory records. These cover the stock of all items owned or used on the farm, including inputs, tools, equipment, harvested products, feed, and even fuel. Inventory records help track usage, prevent shortages, and detect theft or wastage. Common inventory categories: input inventory, seeds, fertilizers, herbicides, animal feed equipment. Inventory: tractors, plows, sprayers. Output inventory: stored grains, harvested crops, animal products, consumables. Inventory: fuel, gloves, packaging materials. Each inventory item should be tracked by quantity purchased and consumed, date of purchase, expiration, remaining quantity supplier, and cost. Example: a rice miller tracks how many empty bags are in stock, how many were used each week, and how many remain for packaging finished rice. Labor records. Labor is a major cost in farming. Labor records help monitor the workforce performance, attendance, payment history, productivity, and duties. Labor records include daily attendance sheets, payroll registers, work schedule sheets, casual versus permanent staff records, task tracking sheets. This record type also helps prevent disputes, calculate wage expenses, and evaluate worker output relative to investment. Example: a tomato farmer tracks the number of days each laborer works during harvesting and how much they were paid, ensuring transparency and budgeting accuracy. Sales and marketing records. These records focus on the post-harvest, distribution, and sales aspects of the business. It helps in tracking customer relationships, pricing trends, delivery schedules, and order fulfillment. They include customer order forms, delivery notes, sales invoices and receipts, pricing history, market demand trends. Example: a cassava processor keeps a record of sales to regular bulk buyers, price per ton, and delivery schedules. This helps project revenue and negotiate long-term contracts. Equipment and maintenance records. Farm machinery and tools are capital-intensive assets. Proper records prevent unexpected breakdowns, ensure optimal use, and extend the lifespan of assets. Tracked details include equipment usage logs, servicing history, repairs and parts replaced, cost of maintenance, operational hours logged. Example, a tractor used daily is logged for fuel use and maintenance every 100 hours of operation to prevent mechanical failure. Regulatory and legal records. For farmers dealing with governments, cooperatives, or international markets, regulatory records are vital. Include land ownership title documents, loan agreements, certifications, organic, GAP, government subsidy applications, tax records. In summary, each farm record serves a specific purpose, but collectively they help manage the farm as a structured, accountable, and financially viable enterprise. Whether the goal is internal planning, tax reporting, financial borrowing, or improving productivity, well-maintained records are the farmer's best asset.